pharmacists should consider the cash accounting method as a tax planning opportunity, given the tax reform law, the change. So it's a perfect opportunity for tax planning, and we're talking a big opportunity. You could have two, $300,000, $400,000 of an expense, which would reduce pretty much most pharmacies' net income for the year. So huge tax planning opportunity. Two key things you do have to be aware of. You absolutely have to make sure your books and records, your QuickBooks file or whatever it may be, that you are studying each month and taking financial statements from, that those are on the accrual method of accounting, because a pharmacy under the cash method of accounting is going to only give you half the picture. So if you're utilizing cash method books to analyze your pharmacy, to manage your pharmacy, you're only getting half the picture. You have to be on the accrual basis for your books and records, but you can go back. You can do a couple accounting journal entries to go to cash at the end of the year for taxes, but very important that you still remain on the accrual method. We can advise you on what the law says, what the general consensus is on how to interpret that law as far as going from the accrual to cash. We can also help you determine whether you need to go to the cash method of accounting, whether it makes sense from a tax mitigation standpoint, from an overall planning standpoint when we're looking at your overall tax picture. So and what you may need to do to take the most advantage of going to the cash method of accounting, whether that's basis injections or whatever it may be. So this is a lot of planning that goes into the going from accrual to cash, but if done right, you can see some significant thousands of dollars of savings.